I mean, on the YouTube channel with other presentations.
All right.
So, okay, I started recording. So let me just say introduction. So we are very, very pleased to have Sha'ista Goga presenting her paper or research, I can say. She's working at Acacia Economics in Johannesburg and working mainly on things related to competition and regulation. And this is your research project, as I understand, or more like policy paper.
Yes. Okay, so I think before I start, it's probably useful just to give a bit of context to the research. So I'm a research fellow at CRED, apart from my work at Acacia Economics. And this research was done for the Industrial Development Think Tank, which is basically an organ of the Department of Trade and Industry and Competition, and it's based at UJ. So although there were a lot of sort of different areas of industrial development and digitization that were being looked at, I've been focused a little bit on digital platforms and market power, but with a focus on very much looking at South African case studies. So this is basically the outcome of some of that research. It's policy-focused research rather than sort of pure academic. And it's qualitative predominantly based on in-depth interviews with a variety of people within the industry. So just to explain what I was trying to do here, this research strand seeks to do a few things. Firstly, to map the landscape of digital platforms and data within certain industries, highlighting those that seem to have market power. Trying to understand the nature of these platforms in South Africa, because obviously South Africa is still quite a nascent market and some of the competitive dynamics are slightly different to those in some of the other economies. And then to understand whether the type of competitive interventions that have been enforced or mooted in other economies are relevant at this stage of development. So the first part of this study looked at e-commerce, and that was done predominantly in 2018. And the second strand, which is what I'm hoping to focus my presentation on today, was looking at tourism and banking. That was done predominantly towards the end of 2019. And I mention the dates because it's quite important in digitization to sort of know which period you're looking at, particularly because 2020, a lot of things changed with COVID and a lot of rapid onboarding. So there may be some differences in the market today as opposed to when this research was done towards the beginning of the year, end of last year. So to start off, I think just to contextualize this research, the benefits of digitalization are apparent to everybody. It allows companies to connect with more customers and to leverage the insights from big data sets. For small and medium enterprises in particular, there's market enhancing benefits where companies are able to access a much broader customer base that's accessible. And the amount of data and the ability to access different markets also enhances the ability for wide-ranging innovation. But as we've seen in many, many markets, there's often competition issues that arise from this. And there are a lot of reasons for this. There's the fact that these markets are two-sided, so that creates some distortions. There's large network effects, large scale economies, and this all leads to tipping towards dominance in many platforms. So internationally, in the UK, the US, the EEC, and in a lot of smaller jurisdictions, there have been multiple investigations and enforcement decisions. So the context for this was to try to understand what was going on in South Africa in various industries and to see where we were at in terms of some of these issues. So as a framework, we looked at three main areas. The one was understanding platform power and its impact on routes to market. And this was focused quite a lot on small and medium enterprises. The second was understanding the impact of market power by big platforms on platform marketplaces. So where you have a platform that sets up and has different industries that then use the platform as a conduit to customers, there's sometimes competitive distortions and abuse of dominance that occurs, and I'll speak a bit more about this. And then the last was understanding platform power and user data and the impact that data is having on either cementing platform power or creating market distortions. So to start off, we looked at tourism, and tourism in the digitization in tourism is large. I think the first platform started in the 1970s, where hotel agents were able to use online booking reservation systems for airlines. So it's something that's been incrementally growing over a large period. But in the 1990s, with the dot-com bubble, what changed was a change in focus from sort of business to business to consumer or consumer to business interactions. So Microsoft in the sort of mid-1990s set up a Expedia, which was basically a website that was a hotel booking platform. And things have evolved since then. So, the digital platforms in tourism create the ability for consumers to do a lot of things. Firstly, they access information, can compare offers, purchase things. This has reduced the transaction and operational costs, and in many instances has cut out agents or middlemen that sort of often occurred in multiple countries with a lot of distortion of information as they went along. But it's also influenced how travel is consumed through review systems, mapping, and language translation. So hotels use digital processes for a range of things, from reservations to operations, their accounting, and their marketing and advertising. And we're going to zero in on two, which is the channel to reservations and marketing. So within booking platforms overall and in South Africa, there's sort of four main categories. There's the online travel agencies, which you would use to book your hotels. These generally work on a commission basis. Hotels choose to list on the agency. You book directly with the hotel, and they sort of pay their commission. There's peer-to-peer platforms, the most famous being Airbnb, where it's more consumer to consumer and you're doing an exchange. And these often have different payment structures. Then we have meta-search site providers, which is your TripAdvisor, Trivago, Booking.com, and Kayak. There are other ones as well. And then you have review websites, which are focused on reviews. Now, the sort of pricing structure of each of these is a bit different. So for example, as I said, online travel agencies generally work on a commission basis. You have international ones such as Booking.com and Expedia, which are all across the world and are very present in South Africa as well. But both these platforms and the hotels often pay meta-search site providers to list their bookings on them. So it's sort of a second layer of the chain. So with Trivago, Booking.com, as well as the hotels themselves, all bid to list on this. And this might include a flat fee for booking as well as some kind of commission. Over time, there's been an increase in concentration in the booking platforms. As you can see, Booking.com, Agoda, Kayak, all owned by Booking.com. There's actually a few more others as well. Hotels.com is owned by Expedia, as is Travelocity, eBookers, Trivago. And what's important is there are also a lot of adjacent things that are owned by them. They've got wholesale agencies for travel agents. They have excursions. There's a whole lot of other complementary things that are also owned by these companies. In South Africa, we have Safari.com. Safari now. That's owned by Travelstart. Sorry, I've made a mistake in what I've circled here. And then the other two big South African ones are also owned by the same company. So we have two larger companies that own each other. And although they're slightly different, there's a sign that there is an increment in concentration. So while there's not much information on market share available, the booking aggregators that work on the back end of the hotels, helping them manage their reservations, have some aggregated information. And what's apparent from one of these large aggregators, SiteMinder, is that Booking.com and Expedia are by far the largest booking channels in South Africa. Number three, which is hotel beds, is your traditional travel agent wholesale bookings, which historically had been the largest. And then we see direct hotel websites are next. So there's a sign that the very, very large international hotel chains are the largest bookers in South Africa. And that was supported by the qualitative interviews that we did. In terms of this differs a lot based on the geography. So you find that hotels in Cape Town, for example, that cater to an international market, have more than 90% of their bookings through Booking.com. In other areas, for example, a guest house in Germiston, they still work a lot through telephone calls, as well as smaller online platforms from South Africa that book. So this is sort of one of the things. There's niches of hotels which are completely dependent on large international platforms. So the pricing structure for this is, for independent, smaller hotels, is generally 15%. It's interesting, but the larger hotels who we spoke to were very, very hesitant to talk about this because larger hotels are often able to negotiate lower prices. Marriott has a deal with Expedia, for example, which is negotiated across the entire world. So it's an international deal. So there's a bit of a lack of transparency over what the commissions paid by different hotels are. But we'd say for the smaller hotels, it's 15%. But what's also interesting about the rates is that there's rate parity in South Africa. So I'm going to just give the definition for this in the next slide. But basically what it means is that in South Africa, the booking platforms all price match. They sort of explicitly do it, that you can claim a refund as a consumer if you find it cheaper elsewhere. But it's also done for the hotels. So the hotels that we spoke to discussed how they get sent emails where their prices are out of kilter between websites, and it's sort of enforced through tracking mechanisms where they have algorithms that look at the prices, and where they see a lower price, they'll send them an email. So there's a lot of concern by smaller hotels over rate parity. Now, just to go back onto rate parity, from a sort of pricing perspective, wide rate parity is prohibited in numerous markets. Okay, I can't find my one slide. But basically, wide rate parity means that you can't charge any other platform less than what you charge in the platform you've contracted with. So that means whether it's your own website, whether it's the website of other online travel agencies, or whether it's some other form of website, you're not allowed to charge a lower price to anyone other than the person you've booked with. The narrow price parity, in contrast, means you can charge people different prices, but you can't charge less on your own website. So internationally, the problem with these parity clauses is just that it creates a price floor on prices, and it limits the incentives for newer entrants or sort of smaller entrants to compete on price. Because if anybody agrees on a lower commission, it applies across the board. The price that they still have to pay is the same. So even if someone provides a lower commission, it doesn't change the price to consumers, and this is problematic in allowing for entry. So as a result of this, wide rate parity was prohibited in numerous markets internationally: the UK, Germany, France, Italy, and Sweden, for example. Narrow rate parity, where you can't charge less on your own website, was prohibited in Germany, but subsequently overturned on appeal. So I think in South Africa, rate parity is still being used and enforced. It's basically creating an artificial floor on prices. So it's preventing smaller websites or those that are trying to sort of negotiate lower commissions from sort of exploring this a bit more and competing on price. Now, obviously, when you're a smaller website or smaller platform, because it's a two-sided market, you both want a lot of people to list on you, but you're also selling the number of providers. So having a competitive differentiator through price is often the main way that people get in, because most consumers know the big brands, but they might go with a smaller brand if there's a substantial price difference. So there are concerns that rate parity inhibits the development of smaller platforms in the market. And I think in South Africa, we should be concerned about this. The second area in which platform power is sometimes evident is in routes to market. So this is the marketing and advertising platforms. Smaller hotels in South Africa use three main forms of advertising and marketing. The one is through search, and that's one of their main routes to market. Google in South Africa has a 97% market share of the search market. So a lot of companies focus on this, and they use search engine optimization to ensure that this is something that comes up when people Google certain terms. So they spend a lot of money doing search engine optimization focused on Google. And so this suggests that it's a major port of entry. The second is digital advertising through search engines, social media, and news content websites. But from the interviews that we did, the focus was very much search engines, with social media being used more to communicate with customers. Then there's the meta search sites, which is the traditional ones, and leveraging by adjacent platforms. And by this, I mean review websites or sort of something else that adds a meta search to it. But for this, hotels often have to pay an amount to get onto the website, and this is sometimes also a bit restrictive for smaller platforms. But what's interesting about adjacent platforms is, whereas a few years ago you would have a review website or a search engine, there's now a lot more interaction between platforms and sideways movement into other areas. And one that I think is quite interesting is Google. So if you search for hotels in Cape Town, I said last year, but I think it actually was the beginning of this year, at the top of the page you get a few paid ads. And if you look at the list, it was booking.com, hotels.com, Legoslav, and Airbnb. So generally large platforms. But after that, Google has a box which has a map. So there's integration with their mapping features. And then it has various paid-for adverts of hotels. If you click through, you basically get onto Google's meta search site. These are paid adverts and they're channels to platforms. So if you want your hotel to show up on Google's box, you actually have to pay Google. But to pay for the first or the second slot, you're actually bidding against hotels.com and booking.com. So often a hotel provider might be outbid by a platform to get onto Google. Then Google has this integration with maps and reviews. So it's integrated several of its products into one to create almost a super hotel product. But as I said, with a 97% market share of search, this is what you see when you get there, when you look at it. So I guess in South Africa, it's interesting because we still at an early stage. We're a bit behind Europe in terms of how far we've got, both in terms of enforcement and in terms of where the market's at in terms of dominance. But I think two things sort of stood out from looking at this market. The first was that booking.com is potentially dominant. I think there are definitely niches in which they are dominant with 90% of the market. And that wide and narrow rate parity is occurring. It's something that's being focused on. And to me, this seems like potentially easy wins for competition authorities, because at the moment, the precedent for it is there, the tools are there. You know, it's been repeated in numerous European countries, and it seems like a quick win to improve competition in the market. The second area of market power and routes to market is a bit of a more tricky one, probably for competition authorities in a smaller market like South Africa. It's clear that dominance in search is being leveraged into other areas. It's clear that aggregators have power, but this is probably going to disappear. So I'd like to draw the parallel to Google Shopping, which was the key enforcement decision in Europe. In Google Shopping, the case was basically made that shopping comparator websites were basically being pushed out of the market by Google pushing them lower and lower in the rankings and putting their own Google shopping boxes up front. And I think it's clear to me that large aggregators are likely to face similar problems in the future, with Google sort of putting its own hotel aggregation up front when you search. So I think this is even more complicated by the sort of integration with maps, reviews, and the sort of other facets of Google. So I'd say this is something that should probably be monitored, and not just in South Africa. I think internationally, I think this has a lot of parallels to Google Shopping in terms of platform dominance. So overall, in tourism, those are the sort of two key areas, and I've focused in on those that have an industrial organization component. Of course, it's important to also note that, I mean, there have been massive benefits from digital platforms for tourism in South Africa, particularly for smaller companies that have access to much wider markets. But that said, in order to fully benefit from this, it's important that the competition authorities do keep an eye on some of these restrictive clauses and market power and routes to market. Okay. Then the second area of digital platform dominance and competition that I focused in on was looking at financial service platforms. So just to give a bit of a background on banking in South Africa banks hold 4.2 trillion in deposits. They process a massive amount of payments on a daily basis. South Africans are fairly banked. 80% of South Africans have bank accounts. But often these bank accounts are quite underutilized. So they may be used for salary to be deposited in, but people go to it and then withdraw their entire salary and don't sort of have the depth of usage of financial instruments. So there's scope for growth, there's scope for betterment of usage. So at the moment in the financial landscape, there's sort of three areas. You have your banks, and in South Africa, I've put the logos in because they're different categories of banks. You have your four big retail banks. Then you've got three new entrants, which are Discovery, Time, and Bank Zero. And then you have quite a few smaller banks with different niches and focuses. Then you have fintechs, which are basically companies that use technology to provide services. And a lot of these are integrated with certain banks. Some of them operate on their own. And then you have big tech. So by big tech, I'm talking about companies like Alibaba, Google, Facebook, who have some technology. At present, they're not in South Africa, but there's sort of signs that they are getting more involved in banking. And I'll talk a little bit more about this soon. So in terms of banking, the banking environment in South Africa is one that's regulated by both the Reserve Bank and the Financial Services Board. You need a license to be able to engage in in all sort of banking processes, and there's sort of different levels of licensing at which you can enter. What's interesting is that it's been very stagnant for many years, but recently there's been the entrance of three new banks, which basically benefited from the fact that digital technology has allowed for sort of lower startup costs. So there's no need for bricks and mortar, there's much lower rollout costs, and all three of these banks have focused on digital platforms being their route to market. So digitalization has many impacts on banking. For one, it allows for branchless banking, which stimulates new entry because you no longer need a network of branches or ATMs across the country in order to enter. Secondly, they provide new channels to customers. I mean, in South Africa, there's been a lot of innovation, although the take-up has been low. There's sort of rails to do WhatsApp banking, banking through Facebook. There's chatbots that can help you to bank. So apart from the general channels that people are used to, there are a lot of new channels that digitalization allows integration for. It allows for value-added services. So one that's quite commonly used is financial dashboards. So this is provided by fintechs in conjunction with banks or separately. And this can allow your banking data to pull through to a dashboard, which allows you to manage your spending, see how you're spending. And this can also be used in other value-added services. So for example, some banks are looking at using this for companies, so aggregating data, drawing patterns, and providing insights. Then social media can be used to interact directly with customers. Digitalization provides new channels to facilitate payment as well. Okay, sorry. In South Africa, if we look at the apps that are used in the main app stores, the banking apps are the apps that are used the most. So if you look at it, banking is sort of your first few here. It's FNB, Capitec, ERSA. So banking apps are very much used in South Africa. So data is at the core of digitalization in banking. And I think what's true is that data has improved the ability for banks and banking systems to improve their offerings to customers. So for one, it enables the collection of deep information in customer use. So they can do this either through the apps, sort of through how they use websites, how they use the app, or through the actual data. And the sort of combination of data, the use of artificial intelligence and machine learning allows a lot of insights. Secondly, it's allowed for innovation in services. So for example, we can now open accounts with digital know your customer services. So you can take a selfie, for example, and that can be matched up by First National Bank with your photograph on Home Affairs. Your geolocation they're sort of still building it up, but the aim is that this will be used for address verification. So the idea is a lot of this innovation that's enabled by digital services will allow for expansion to people who have difficulties with some of this. Thirdly, in terms of risk, you can get better profiling of customers. I mean, adjacent to banking in insurance, this is already being used in South Africa by companies like Discovery, where your driving can be monitored. your fitness can be monitored, and this assists in profiling for risk, and similar sort of innovations are developing for banking. AI and machine learning can spot fraud detection more easily than humans can. There's the ability to personalize products and to target customers for marketing products that are beneficial to them, as well as personalized value-added services. So with all of this use of data in banking, there's an argument that data actually has value, and that banks are a platform. Banking data is something that should be utilized. In South Africa, the interviews that we had suggested that at present, banks and financial service industries are not exploiting the potential of consumer data. So there were a lot of reasons given for this. One is currently the structure of data at banks. Legacy systems mean that data is often in silos. Each sort of department has their data structured differently. There's often very old systems, which mean that pulling out that data can sometimes be difficult. There was some controversy over whether this was true or not, with probably about half the banks saying that data structure is a huge issue, and half saying it's something you can get around, but it is difficult and adds a few layers onto the process. But what to me seems like a bigger issue is regulations and privacy regulations. At present, banks don't seem to have clarity on how they should use data within the sort of framework. And as a result, they're taking a conservative approach to what data they combine and what they use it for. So to a large extent, it seems that sort of experimental use of data to market is not really happening, and each sort of division is guarding their data. They're not really mixing it up a lot. And this is especially across different products. So for example, you wouldn't have your insurance products and your banking products informing each other. Some providers are creating depersonalized sort of indices or systems to try to capture some of the insights without providing the data to each other. But at this stage, I think the idea of using data to fulfill all the roles that we talked about in the previous slide, particularly those related to personalization and drawing insights, is not really happening. And then the third reason that was raised quite a bit was just skills and the shortage of skilled programmers and people able to assist with this. So if banks are a platform, who can benefit from access to the data if they currently have power over this data and they have market power over the data? For one, we're looking at a sort of oligopoly. We're looking at banks which certain banks have sort of high levels of concentration. So there's an argument that in order to promote competition, which is something that's come up in the Competition Commission banking inquiry historically, you should be promoting switching. And there's a question as to whether access to customer data enables switching. In the UK, they have current account switching systems. This doesn't seem to have worked very well, but there are questions as to whether customers, knowing that data is used to make decisions on credit and risk, would be happier to switch if their data could go with them. Or if banks knew that they could get this data, would they be able to take more risks and provide more innovative products? So there's a question about banks and switching. The second people who could use banks as a platform, which is a level down, so not competing with banks, but as inputs into banks downstream, is the fintech providers. So there are many types of fintech providers, and I'm not going to go through all of the types, but just to highlight some. If you're a fintech provider trying to find personal finance solutions for a consumer, you need access to transactions. If you want to do lending, looking at transaction history provides a lot of insight. With payments and remittances as well, you want to see whether a payment has arrived or not, and you require access to the bank to do this. And then there's corporate business solutions, which also wants to look at sort of large tracts of business data. Now in South Africa, this is done currently through screen scraping. And this is quite problematic because there's sort of issues with the fact that you're providing someone with access to your account. It's not particularly secure, and there's questions as to where the liability lies for a breach. So there's a question as to whether more secure means of using banks' data as a platform and allowing providers to then feed off it, sort of breaking the link between the proprietary ownership of the data by the bank and providing it to the consumers to use as they want downstream, the fintech providers should be allowed. And then the third group of people who probably would like access to bank data is big tech. As I mentioned, it might be possible for big tech to enter, and at the moment they haven't shown interest in South Africa, but if you were to combine banking data with soft data, so social media data, search engine data, it would provide you a very powerful tool set to enter new markets. So the discussion on means of securely sharing access and control over banking data has occurred in many countries. It's been implemented in some, the UK, EU, Australia, Singapore, and Hong Kong. There's a lot of variation in how it's structured, whether it's mandated or voluntary, whether it applies to all banks or just the largest few. In Australia, it's just the largest. Which classes of products it applies to, and then what type of data, whether it's raw data, derived data, aggregated. So there are different ways in which this can be done. So the idea is that in South Africa, to enhance the ability for sort of fintechs to improve, at present, a lot of them are using screen scraping, which you provide them with login credentials, they log in and they sort of search, or you could have APIs, which is more controlled access. And at the moment, it is provided by some banks. I mean, Nedbank has an entire program on APIs for fintechs, but there's still issues with liability and risk. So there's a question as to whether there's more that can be done to stimulate competition for banking data. Then in terms of data portability and switching, which is bank-to-bank questions, there's a question as to whether it will improve credit ratings and assist with switching. A lot of people aren't clear that it will have significant benefits. Consumers seem to think it's good. Banks seem to think it wouldn't have that many benefits to them. In the interview responses, there's questions in terms of both the open banking for the APIs and the switching. Who's liable for security breaches? How practical is it to standardize API access over an entire group of banks? In terms of switching, some of the newer banks said, well, we don't actually think long-term historical data is that relevant to our credit choices. And then the big question that came through a lot of banks, will we have to provide big tech with access to it? So if you have an open banking system, does this mean that a Google or an Apple who comes into the country can also access the data? And if this is the case, where's the reciprocity? And what does this mean in terms of dominant platforms then getting access to very detailed data by customers? Banks also highlighted that while banking data is important, there's other data that's also important. So your identity data, utility data, which can be used to achieve similar aims. So just a question as to how far this type of legislation or sort of interventions could go. So I think to me, the big tech is quite interesting. So internationally, in terms of big tech, we find that Alibaba and Tencent are quite deep in financial services. They use the data to pre-approve loans. I mean, Tencent uses its WeChat data to look at loans. Alibaba has some of the largest financial services in China, and Ant Financial, which is the financial arm, has applied for a digital banking license. In the sort of more Western world, companies like Apple, Facebook, and Google are a little bit more limited. Most of the payment mechanisms use card rails, so they're using the current banking system. And with an exception of Facebook's Libra, which was intended to be a cryptocurrency, but is currently on hold, most of them are using current things. But it's important to note that a lot of them have applied for digital banking licenses. So it's possible that the intent to enter is there. And the increased integration across systems suggests that this is going to happen more frequently. So in terms of the banking and financial sector in South Africa, there's questions over whether there would be harm to competition and consumers from the gatekeeper role by big tech at the moment. Banks don't feel that this is an issue. They don't feel that consumers use big tech as a route to market for banking. in terms of requiring entry into the South African banking industry, at the moment, most entry is through card rails or sponsorship, and in South Africa, the regulations currently require sponsored banks. So if the larger system, the larger tech companies were to enter, they would require sponsored banks in South Africa. But a closed system like Alipay or Libra would be more disruptive. At the moment, though, control over route to customers is not an issue. So we sort of have the gatekeeper role by big tech not being an issue and the route to customers. But at the moment, the banks sort of still play that gatekeeper role over their data. Other data issues and market power issues from data from financial services that have arisen in the course of this research was that one thing that came up was, can data be shared across divisions? At the moment, people are shying away from it, but can it be done and under what circumstances? Is this a problem? Does the fact that, say for example, okay, this isn't happening, but say for example, my insurer had access to my fitness device data and then decides not to lend for a house because it looks like I'm going to basically have a heart attack soon. Is this a problem? You know, there are a whole lot of privacy issues that fit into it as well, which is something that South Africa is going to have to thrash out. But it's important that in looking at data privacy issues, we also consider the competitive impacts of it. Other issues are cloud storage and localization requirements, and then who owns their data. So at the moment, there's been a case between Discovery Vitality and Liberty relating to Liberty using a Vitality status to offer discounts on their products. And Discovery has said the Vitality status is proprietary, and Liberty says, well, the status itself, the data is proprietary, but the status is public. So there's some interesting questions over data ownership and competition and how this is going to impact on innovation by a platform if you're expected to then share some of the insights with other platforms. So in conclusion, in terms of these two case studies, the market power issues in South Africa, the concerns that have arisen mirror those in other jurisdictions. The case studies show potential for further work. In terms of booking platforms, market power does seem to be occurring. There are anti-competitive clauses and practices, and there's a potential for increased market power by large search platforms. In terms of financial services and banking, I think if South Africa is to look at open banking, variations should be considered to balance the different objectives, and the competition considerations need to be aired. The data policies need to consider privacy, but also liability and risk, so shouldn't be taken too hastily. But I think in looking at open banking, it is important to monitor the entry of big tech into the banking system and to ensure that we sort of don't end up with a case in which big tech has access to a lot of banking data with no reciprocity, which sort of enhances the dominance and ability to sort of combine a lot of different platforms and data in a way that creates and reinforces dominance. So yeah, so that's my sort of quick overview of these two aspects of research. I didn't go into the e-commerce because that I didn't think we'd have time for that, but I'm happy to take any questions or discussion.
Thank you very much, Sha'ista, for a very interesting presentation, and I think lots of interesting research ideas. So there's time for questions, of course. Anybody wants to ask something? Just please raise your hand or unmute yourself. Okay, so I guess everything was clear. I'd like to ask some questions then. So
yes, please.
You discussed the fact that there is increasing vertical concentration, concentration in the case of search platforms on tourism, hotel booking, like reviewers, review platforms, booking platforms, this meta search platforms, and so on.
Yes.
And I wonder, so I think it's one interesting research question is to what extent this indeed increases market power, and also like to what extent maybe there is, if there is any detected bias of say meta search platforms towards own booking platforms and so on. I'm not sure whether there's any evidence on this so far. So this links to the Google case and say Google search bias with respect to Google Shopping. So I'm not sure whether you heard anything about this.
So what's interesting about a lot of this is that, you know, a lot of the pricing structures have premium pricing. So you can sort of go higher up in the rankings if you pay a certain amount extra. So if you give a commission of 18%, say, instead of 15%, we'll put you on the front page in the first few queries. And I think with this, there is a question as to whether the sort of own group entities are paying the premiums or whether they're getting preferential placement. And I think at the moment it's not clear. And this would be interesting to sort of research and find the links between this. I mean, you know, in terms of the market power, it's interesting. A lot of these mergers go through because they're not necessarily in the same competition market per se. So you might find that they're in different niches and things, but sort of the combination over a lot of entities over a long period of time then provides some kind of conglomerate status, which I would argue when you sort of combine offerings enhances market power. But I mean, obviously this would have to be tested properly. So I mean, in South Africa now we're starting to see mergers in this area, and I think the last one was a Travel Start merger, and there I think it was seen that they were in different niches, so they weren't really competing head to head, and they had all these large platforms as well that were competing with them.
All right, thank you. Anybody wants to ask any question? If not, then I will go on with another one. Okay, so one question related to this, which I also have, maybe you know more about this. You mentioned that in case of some regions of South Africa, like Cape Town, majority of booking goes through booking.com. And I think we can expect that over time, more and more hotels, even in more remote areas, will need booking.com. So one question is, to what extent this is happening, that say local booking platforms like safari.com, they're losing market share, or maybe like smaller providers that may be out of market, and eventually also with this respect, these commissions, they will be going overseas, right? So this booking.com is Dutch company, if I recall correctly. So these commissions will be going out of South Africa versus in case of local platforms, they stay in South Africa. So I don't know whether there's an discussion of this type or concern.
Well, it's interesting because, I mean, we don't have the data from the companies, but what you can see is where you Google different areas and who's paying for the top slots of adverts. So, I mean, what you do find is that the big international platforms are definitely buying up the spots in the urban areas, Johannesburg, Cape Town, and that. And at present, in the sort of more, I'd say, local tourist areas. So if you look more at, say, the South Coast or something, you wouldn't find booking.com there as yet. At the moment, I think the companies that are putting money into buying the search spots on Google are areas like, are companies like safari.com. And then this goes to the routes to market. So if I'm looking for a place in the South Coast, even if the hotel is listed on booking.com, but they're not actually paying Google to advertise or to sort of get a premium slot, you're doing it organically, the first thing I see will be safari.com. So at the moment, for the local websites, this is actually the niche that they're getting. But you're right, were booking.com to try to expand and increase it, that would be where they go. But at the moment, I think South African websites have benefited from the fact that booking.com and the larger platforms have sort of focused on the big volume areas. So big volume in terms of having lots of hotels on the platform in that area and lots of people searching for it. But I think this could change over time. I mean, in terms of the tax issue, that's actually quite, yeah, I think that's another research area that's very interesting. I didn't look at tax in detail from a tourism perspective. I've looked at it for e-commerce, and SARS seems to be trying to get on top of it very quickly and I think in terms of sort of physical products so far, they sort of were world leading in sort of getting taxation in. But I agree with you, you know, the commission does go out of the country, the employment does go out of the country. So it is, there's definitely an incentive to try to promote local platforms.
Thanks a lot again. So any questions from the audience?
Oh, come on, guys, surely you have a question.
Okay, I also have another question. So with respect to banking industry and the entry of fintech, so you said that it's easier to enter because of the you don't need fixed presence anymore. And then with respect to the data issue, I mean, one question is to what extent indeed data is a barrier to entry with respect to, because I guess all these fintech companies, when they enter, without data, they are, say, giving loans to a pool of customers that has worse credit rating. So overall, they have higher costs in that sense, like the share of loans which are not paid back. As I understand, so far there's no obligatory access to the data of banks, or at least the data that allows better screening of customers in terms of loans giving, right?
Yeah.
Concerns other information.
Okay. So, I mean, in South Africa at present, the data that you are able to get as a new bank is credit bureau data. So everyone reports into a credit bureau. So you do have some baseline data to see your really bad credit risks. So new entrants do have access to that data. It's interesting, the new entrants have used different tactics. So for example, Bank Zero isn't focusing on credit extension at the moment. They focused on savings. Discovery is in some ways trying to sort of promote good savings behavior and that as well. So they're trying to build the data and also linking with their Vitality platform. So I think they also, you know, they're sort of trying to start up front with a focus on sort of building the data by promoting certain financial behaviors. So they're trying to be a digital bank in that way, but all of them have started without access to the data from other banks. So I think that would suggest to me it's not a huge barrier to entry at the moment. Banks in South Africa, I think the data usage would differ across the type of accounts, but I think a lot of the basic entry-level accounts, it's sort of money in the last few months. With your 3 months bank statements, banks feel that gives you something of an idea of what a person is going to do, whether they're employed or not, whether they have steady income. So I mean, they sort of say at this stage, they feel there's less benefit of having this massive amount of data. And even if they had it, they're not clear that they'd be able to fully exploit it. I mean, these are the existing banks as well, from others. But I think who seems more nimble and wanting to use that data is not really the licensed banks, which is sort of Discovery, Bank Zero and Time, but more the fintechs who can see interesting uses for the data but don't have access to it. But their product wouldn't be a retail banking product, it would be some other value-added service.
All right, that's interesting. Let's hope this will increase then also competition in banking sector.
Yeah, I think it will over time, but I think it has to mature. And to be honest, I sort of came into this research reading up all this information on innovation and what data can be used for. And I was quite excited to speak to the banks. And I must say, without getting into too much of trouble, I was quite disappointed by the level at which South African banks are currently using data, including some of the ones that you think of as being quite innovative. I think there's a long way to go to fully sort of deriving the benefits of data. And as I said, part of this seems to be legacy issues and risk, but I think in terms of innovation, there's much more that can occur.
All right, thank you very much again. So one more round. Are there any questions?
It's Tanya. You just said something that I found interesting with the banks. How do you find I mean, if you look at your apps as FNB, your old, I say it with respect, old banks, do you think that if you compare them to your new Discovery and Time banks, that there's going to be a movement where the new fintech and new banks, online banks, are actually going to move away or increase their market share if the older banks do not embrace that. Because what I'm saying, that what I'm thinking sometimes is that the older banks, they had no choice but to start having a platform. So they never really tried to be new, innovative. I really say that with respect, because I think FNB was better innovative. But how do you find that? Do you think there's a difference in the advance and maybe the vision on how to improve the platforms on the internet?
Yeah, I think that's an interesting question. I think I found a lot of difference across the different older banks when I spoke to them. So there are definitely some that are very, very focused on innovation and trying to sort of improve systems. So for example, when you talk about the KYC and integration with Home Affairs, so you can take a selfie, or you talk about WhatsApp banking. I mean, there's some banks who are just exploring and investigating and experimenting with this. And then you do have other old banks who are sort of holding back a lot more and saying, wait, let's just be conservative, let's see what happens. So I think you're going to find differences within the banks themselves as to who adapts and who doesn't. And then in terms of the big tech as well, I'm sorry, not the big tech, the digital banks as well, even there, with the ones I spoke to, there was variation between those that actually seemed very conservative and came from a traditional banking background, and those that were a little bit more willing to experiment. So I don't think necessarily that the old banks aren't going to be up to the task. I think part of their challenge is that they're less niche. So while they're still wanting to try to attract the customers who want to be able to bank on their app and get the nice scrolls, they've also got their sort of widespread bricks and mortar customers in rural areas who actually still want a bank and an ATM because they want to speak to someone. So I think for the big banks, they have to sort of marry these different customer niches, whether the digital ones are sort of putting all their focus in the digital niche. So they're going to be able to expand a bit faster on the innovation side because they're spreading themselves over less. But yeah, I think it's very much a company by company thing rather than the sort of existing and the new. That's my sense.
Thanks. I think it is a very interesting thing to keep our eyes on, to see what the older banks, and like I said, conservatism, sometimes, I work in the finance industry, and I know some of the people in the banking industry has got their brick and mortar hat still on.
Yes, yes.
Yeah, it's going to be interesting. Thanks.
Yeah.
All right, thank you. There's time for one more question, maybe. I've seen there was a hand raised. Riham, did you want to ask something?
Yes, thank you, Lucas, and thank you for your presentation, Sha'ista. I appreciate it, and I found it very interesting. I was wondering, from a consumer welfare perspective, whether it is possible or desirable that we should force these first movers in banking and with their large collections of data to divest some of this data to the newer banks and perhaps some of the fintech companies who can arguably do a better job with all that data. But given the rich nature of the data that these incumbents have, whether they could provide a more personalized and better product to consumers. So I was just wondering what you think.
Yeah, my personal feeling is that some form of open banking, which I think I didn't probably speak in a lot of detail about this, but what they've done in some countries is they've created APIs, which is, I think it's called access point interfaces, which is just a sort of secure means of providing certain data in a certain standardized way. And this can be sort of accessed by your fintechs. And I think in South Africa, we're going to have to look at structuring open banking so this data can be used by fintechs in a better way. Because I think, you know, the benefits from having these nimble, innovator providers using the data more in sort of niche ways for niche markets is going to be exponential from a consumer perspective. So my feeling is that although I think the banking industry will have a lot of reasons as to why they don't want this, and that's related to liability and risk, that actually needs to be balanced with the consumer benefit. I mean, I think at present there are some fintechs working within banks, but what you need to do is actually remove that so you have competition among the fintechs, and the sort of vertical relationship isn't what matters as much. So I think open banking and its variations is something that definitely should be considered from a regulatory perspective, and it's something that needs to be investigated much more and thought about. So yeah.
Thank you. Thank you. That's an interesting idea. I kind of like the idea of separating, to some extent, the banks from the fintechs. And what you're proposing sounds like just increasing the competition between the fintechs. I guess that open interface is then kind of crucial to prevent some kind of harmful effects from vertical integration.
Yes, yes.
All right, it's almost 3 o'clock, so we should finish our session. I would like to thank Sha'ista again for the presentation and everybody for participating. And just one announcement. So if any of you wants to present your research ideas, then feel free to email me. We are more than happy to schedule your presentation. We will have another one in 2 weeks, so on 4th of November, by Yegnanev Shireva from University of Johannesburg. He will talk about digital gender divide. So please watch announcements from ERSA. Right. Thank you very much again, and have a good day.
All right. Thank you, Lucas.